When it comes to investing, it's easy to be intimidated by the complexities of the stock market. That's why most people turn to financial institutions for investment advice. But now millions around the world are using the internet to educate themselves about investing, empowering individuals to do it themselves using mobile trading apps. Their power was on display in January when retail investors from the Wall Street Bets subreddit sent the share price of an American retailer GameStop soaring from $17 to nearly $350 in a matter of days. Financial journalist Simon Brown explains what caused the GameStop share price to skyrocket. Please explain what happened with GameStop.
You buy a share, it rises, you make a profit. Short interest is when you're betting on a share going down. So basically you sell the share that you don't own, it falls, and you buy it back at a lower price. And that's how you make your profit. Problem is when the share starts to rise, those short interests are losing money, so they need to exit the trade. And how do they exit? Well, they buy and they push prices higher.
This is what's known as a short squeeze. Major Wall Street hedge funds had bet that the GameStop stock would fall in price. This is called shorting the stock. But then millions of retail investors started buying GameStop, causing the share price to rise. To cover their losses, the hedge funds were forced to buy the stock, sending the share price to record levels. 17-year-old Ryan Cherry is a follower of Wall Street Bets who got caught up in the GameStop euphoria.
I first saw a few Reddit posts and I didn't think much of it. But then my friend started talking about it and he said he bought in. That was at $19. But then we saw it rising and got excited and then bought in.
Ryan, how much did you invest in total?
Around about 23,500 Rand.
Ryan bought when GameStop was trading at $95, but did not sell when it peaked. He watched in horror when the stock price crashed.
So if you sold when the share price had peaked, you would have made about 83,000 Rand, but then it didn't.
It really did hurt quite a bit, but we thought it would go higher. And we looked at the short interest rate, which is what caused this whole thing. And everything looked to still be good. We're confident that it's going to keep rising. And even if it doesn't keep rising, to start with, it was a gamble. And we did put that money on the line for a gamble because it's Wall Street.
A digital revolution is fueling the staggering growth of retail investors all over the world, including here in South Africa. These days, it's so easy to trade shares. All you need to do is download an app onto your smartphone, and you're able to buy and sell from the comfort of your living room. One of the most popular online trading apps in South Africa is Easy Equities. Charles Savage is their CEO.
6 years ago, we had this idea to democratize access to all things investing. And we realized that the future of investing was going to be one on digital channels and specifically mobile app.
So then, Charles, how does it all work?
Let's go. South Africa's favorite over the last year has been Sasol. So it's a 200 Rand stock. So normally, I wouldn't be able to buy anything less than 200 Rand. Let's go and buy 9 Rand of stock.
9 Rand?
9 Rand. And I'm actually going to prove my point with 5 Rand. And I'm going to say, I want to buy 5 Rand of Sasol. I'm going to do it once off. And I'm going to click buy now. And literally that transaction is done. I am now a 5 Rand shareholder in Sasol.
The growth in retail investors has been fueled by the COVID-19 pandemic, especially when the world first went into lockdown.
What we've seen in the pandemic, and this has been a global phenomenon, is people stuck at home. What do we do? Where do we go? But even here in South Africa, if you kept onto your job, you were simply spending less. You weren't going to restaurants or pubs. You weren't putting petrol in your car. So people were a little more cash flush. We had the collapse back in March of last year, and then markets just started to run like crazy. And there's nothing that attracts an investor more than a booming stock market.
For video editor Michael Fliss, it was financial distress that motivated him.
I kind of got into cryptocurrencies and into the market. It was sort of June 2020. It was when we were in lockdown for 2 months. All my options were being taken away from me. I wasn't making enough money. I didn't have any idea with regards to what was the future going to bring. And I also wanted to look at something where I was really in control myself. I started trading, but very cautiously. Did I see gains in the beginning? No, I didn't. So yeah, when I saw my first return, my first 150% profit, it was amazing. But then what I did do is I immediately used those funds to reinvest. For me, it's not about pulling the profit out. For me, it's becoming an investment avenue.
Easy Equities also saw a surge in new subscribers.
Pre-COVID, we published our 6-month results in end of February. Our growth rates were about 12,000 customers a month and about 250 million Rand in new capital. So those are people making deposits into the platform. COVID hit, and in 1 month, we onboarded 65,000 customers and over 800 million Rand in new deposits. COVID was a tipping point for the group for sure, but the growth continues.
Esther Mukumbo started her account in 2018. During lockdown, she had more disposable income available to invest with.
So when the pandemic hit, because we're not going to work every day, we could work from home, we're able to have more disposable income. And because of that, we're then able to divert some of that disposable income towards investing more and growing our portfolio. Initially, I only had 500 Rand and I started buying, companies like Discovery, the usual companies that everyone talks about. And then I sort of had to readjust my sort of strategy as I went along. I increased the value to 1,000 Rand. And over time, it becomes, you start enjoying it as you start seeing the return. And over time, I've been able to start increasing it to now what it is to 3,000 Rand a month for me. That's what I'm able to do at the moment. So over time, I think I've seen my portfolio grow, and that's been encouraging. And to know that my portfolio has now actually performed my other investments like my retirement annuity and pension fund makes me wonder if there's value in doing it yourself.
Esther's one of an estimated 1 million retail investors in South Africa. But are these millennial traders responsible with long-term saving ambitions, or are they gamblers playing the stock market like a casino?
So for me, I'm more long-term, so I look at it more long-term, but I know I can see where the excitement can come in when you see shares going up in the matter of days, going up by $10 in the US, for example. So I'm about sitting on 30% return on my portfolio at the moment. Over time, I know that I'll create, a bit of an income for myself and my family.
That desire to be rich in a hurry, that desire to be the person who turns $50,000 into 50 million. I mean, who doesn't want to be that? The truth is, more people, a heck of a lot more people, turn $50,000 into zero than turn $50,000 into 50 million.
How will the growing number of South African retail investors change the way we do business?
It was reported that 25% of all investing activities in the US is now retail. In South Africa, we estimate that's between 3 and 5%. It'll probably be 5 to 10 years where we see the leveling of those playing fields. And South African retail investors announcing themselves on the playing field. Listed CEOs are going to have to think more cautiously about what their retail investors think about, because most CEOs wake up every morning worrying about what the institutions think about. And we're learning fast that actually the most valuable shareholder is going to be, the future shareholder is going to be the retail investor.
For those considering trying their hand at retail investing, what advice should they heed?
As soon as we want to get rich in a hurry, we've now got to move into that trading space. And my advice to being in the trading space is sure but. And the but is that it's scary out there. You can lose money. You can lose more than you started with. Be very, very careful. Expect it to be emotionally painful. Expect to lose money. Expect to become discouraged. And maybe you get lucky. And then it's going to take some time. A lot of it is emotional and psychological rather than just rands and cents. Fear and greed.